Hey, Jeff.
Hey, Meesha.
With a finger on the pulse of the real estate market, these are your amazing hosts, Meesha Rawal.
Yeah, and Jeff Aughey.
And today we're talking about something that a lot of people are feeling in the market right now. The spring market is not dead. The buyers are still out there. Homes are still selling, but this market is definitely looking more selective than it was a few years ago. And I think a better way to say this, Jeff, might be that the market is not frozen, just a little pickier. The buyers are a little more payment sensitive. Sellers have to be a little more realistic, and the homes that are priced and presented well are still getting attention, but the homes that are overpriced, need too much work, or don't show well are having a much harder time, don't you think?
Yeah, I mean, Meesha, you're exactly right. I think that the key message for today is that this is not a panic market. It's not a crash market, right? It's that it's a market where we have to be a little sharper on our game. And I think sellers have to have a little lower expectations, right? And you need to understand that buyers are comparing things more carefully. They have a little bit more to choose from. And, you know, they looking at interest rates, definitely they've been fluctuating up and down, as we all know, right? In March 1st, it was down at 6%. And now we just looked at, we're up to 6.6%. So, the war hasn't helped. And, they're looking at the monthly payment, and they're just a little bit cautious, right? So
yes, and talking about the monthly payments, that's why we talk about the mortgage rates, which have really affected everything. Like you said, the mortgage interest rate is about 6.6%, depending on the lender, your credit score, and the loan program. And this is not the 2.5%, 3% market that we saw a few years ago, even though we wish we were back in that market. But we have to remember, when we were back in that market, the prices were driven up. Right now, the prices are up and the interest rates are up as well. And, like a buyer might like a house online. They may want to go see it in person. They may love it. But then when they look at the monthly payment, that's when the decision gets a little more serious.
yeah, and I think this is the thing that sellers need to understand. The buyer might say, hey, look, they're not rejecting the house because they don't like it. They might say, wow, it looks really nice and it's great. But then they start looking at the payment and work it out, and they're like, holy cow, this is pretty expensive. So it definitely, it does slow things down for some buyers. And that's why pricing is super important right now. You can't just say, oh, let's try a higher number and see what happens. They'll offer, give us an offer. Because once a home sits for a while, what does everybody ask? What's wrong with the market?
Yeah, exactly.
What's wrong with the home? So, yeah.
And so it's not like the buyers have disappeared. There's so many families that are currently looking. They're just a little cautious, and they want to see, well, what else is coming on the market? What is that going to be priced at?
Yeah, they're just being a little more pickier, maybe a little more analytical. Like you say, they're just like it's a big choice. And they want to make sure they're making a great decision because it's fairly expensive now to buy a home. Like I say, prices are still up and interest rates are up.
Yeah, and sometimes when you look at your rental payment and you look at your mortgage payment, you would be like, well, I'm just happy to be in my rental because that's the maximum you will pay, while a mortgage is the minimum you will pay for a house.
Yeah, absolutely.
Yeah. So another headline that stood out recently is that the home purchase loans dropped to a 12-year low in the first quarter of 2026. And that's a pretty big statement. It, again, does not mean that no one is buying, but it does tell us that fewer buyers are actually putting their hands in their pocket and reaching the closing table with the mortgage.
Yeah, and it's kind of like we were just talking about. It fits well with what we're seeing right now, is that people are still looking and still showings and buyers are still buying, right? And all the buyers still looking on Zillow and Realtor.com and through the MLS, but at the end of the day, there are some people that just can't qualify for the home that they really want. And so some of them are still renting, right? And then some just are not going to buy that home right now. And so they're saying, we've heard a lot. We do talk to a lot of people because we're outdoor knocking so frequently. I think it's one of the things that make us a little unique. A lot of agents, frankly, they don't get out there and talk to the public like we do. And we'll talk a little bit later on in the show here of this expectation about rates, what it's happened in the past. Everybody thought that rates were going to come down, and we're going to talk about what might happen in the future here a little bit later in the show.
That's true. So this is what we're trying to say is really a quality over quantity market. It's not like buyers are rushing, breaking down the doors to write an offer. But the few offers that do come in are quality offers. The buyer has done their homework is okay with the mortgage payment and then is very serious about buying.
Yeah, I mean, that's a good way to put it. It's quality over quantity, because you don't really need 50 buyers to sell your house. You just need the right buyer. And that's why pricing is important. It's so important, because you can't chase away that one guy who might buy your house.
Yeah.
So, yeah.
And when somebody buys a house, they do talk to their friends about what their monthly payment is, how much the monthly payment is going to be. And I think this is very pertinent to the next topic that we are about to discuss, is the buy downs that we had in 2023, 24. A lot of builders, to incentivize the buyers into buying houses, because we were coming out of the 2%, 3% market, and the builders were like, well, we're not going back to that, but what we could do is incentivize buyers to have a little bit of a buy down. And now, after the 3-to-1 buy downs, they are almost at the end, because a lot of people are going to have their payments come back to market interest rates, and that's going to affect them.
Yeah, and just, I guess, for those folks that don't know what the buy down actually is, let's just let's use 2023. It certainly, we got up over 7.5% in the fall, if I remember right. And let's say that the base rate, let's just call it 7.5%. And a 3-2-1 buy down would mean on the first year's rate, it was 3 percentage points down from that. So it started at 4.5. Then the next year it went to 5.5. Next year 6.5, and then by the end of the third year, it goes back to 7.5 and stays that way for the rest of the time, unless you refinance or sell. And so, yeah, just like you say, these people who started off with these rates, and they were, what we all say back in the day, right? You like marry the house, and you're going to date the rate, and you're going to refinance at some point because I'm sure it's going to go down. Well, it's come down some, but it hasn't come down dramatically.
Yeah, and so the 3-to-1 is at its end. So starting 2027, a lot of people will be paying the 7.5%. Interest rate that will definitely affect their mortgage. So we may see a lot more houses coming back on the market, or at least a lot of struggle. So these people are going to be talking to their friends who bought houses and kind of cautioning them, I hope, about the 3-to-1 buy down.
Yeah, I think, you can't know what's going to happen in the future. We don't know that rates are going to fall, and there's just too many variables that are, we don't have crystal balls. And so, I think we always do a pretty good job of cautioning our folks. It's like, let's not use rose-colored glasses. Let's make good decisions that we can live with today, and let's not just pretend and hope that things will change in our favors, right?
True. And another interesting trend that is happening in our market is that investors are pulling back, and recent reports have shown that investor home purchases have dropped to their lowest level since 2020. And that's important because investors were a major force in our market.
Yeah, and it here, I think, if I remember right, it wasn't like it's hasn't dramatically caved, but I think if I remember seeing those numbers, it was about 6% down over previous quarter compared to the first quarter of this year. So it's enough to make a difference. It's kind of like the investors are looking at the environment, and there's some of them are saying, well, maybe it's not a great time to buy an investment home. Yeah,
because the numbers have to make sense for investors. It's all about the numbers for them. And if the rental that they're getting does not justify the mortgage that they're paying, they may be a little cautious.
Yeah. And
there were some subdivisions that do not allow investors at all. I think because of the housing crisis, there were these subdivisions up in Cumming that said they were 100% owner occupied. So we had that also because there was like a cap on investors that were allowed to buy houses.
Yeah, I think, especially, and maybe a caution for some of our folks that maybe this is the first time they're getting into investing, and we've had some that have gotten into trouble. I think even one that you helped, or certainly you knew her, and now she's reached out to you for some help in selling it, perhaps, right? I think it was a townhome over in Glenmore.
That's true, and she bought it at a great price, not with us. Mm-hmm. I met her after she'd owned it for about 4 or 5 months, and she even had a squatter situation in there.
I helped you out with that. Yes, that was a mess.
Yes, and then after having tenants in there for about 3 years, she did the numbers and said it was probably more effective for her if she had put that money in the stock market. But again, hindsight is 2020.
Yeah.
But like she is not getting the kind of return that she had anticipated when she'd bought the townhouse.
Yeah.
So changing direction a little bit, Jeff, what are we seeing locally? Let's bring this closer to home. You've been looking at year-to-date numbers and also the period since the war started, because a lot of people were wondering whether they should have an immediate effect on our local market. What are we seeing in Forsyth and Fulton County?
Yeah. Well, first, let's just talk briefly about the war. It's kind of been a running trend we've been doing these last, each month, touching base. And while the war, but I think we can say now we've got a lot of data. Initially, the war held people back a little bit, but since maybe the first 3 weeks, now I think people have been accustomed, and it's not really changing anything that we can see dramatically at this point. So I'd say the war is at this point not really having an effect. It's just the overall problem we've had in the last few years, where unaffordability is the problem, higher interest rates, still high prices. That's not like the prices have come down. So it's just tough for folks to purchase. And so when we look at kind of year-to-date numbers, and when we're talking about Forsyth County and North Fulton County, when we look at those sales, it's about even the same number of home sales in 2025 and 2026 year to date with single family homes. There was a slight difference, and there's the only difference between any of the studies we did here is that in Forsyth County we did see a weakening of about 15% in the number of sales when we're talking about the townhome market. When we look at the Fulton County, their single family homes, again, just about the same as last year, no difference really to speak of, and only a 3% decline for the attached home. So why did Forsyth have a 15% decline and Fulton County had 3%? Not really sure. It kind of tells us that lower part of the market is maybe trying to focus in closer to town for whatever reason, and that's maybe it's for jobs, just being closer in for the city. I don't really know exactly, but that's really the only difference we really see there. And so, this year is kind of like last year, which is kind of like the year before. We're caught in this rut, so to speak. Huh?
Yeah. So what does this mean for sellers? Let's talk directly to sellers, Jeff. If someone is thinking about selling in Alpharetta, Cumming, Johns Creek, Milton, our neck of the woods, what should they take away from all of this?
I think the thing that they really need to take away is just realize that this is not 2021 and the first part of 22. You have to be on your game. You have to have your home looking good, make the repairs, make some updates that make sense. And then price it right and use a realtor that's going to expose it properly. And if it's not priced right now, your house probably is not going to sell in certain parts of the markets. We still have some little hot pockets here and there. Sure. We use maybe a little bit more flexibility, but you really have to be a little bit more careful when you are a seller.
So presentation matters more now more than ever.
Absolute presentation, pricing, preparation, everything. It all matters so much, right? You just talk about the one you just did. I thought you did an amazing job, frankly. It was that
1728.
Yes,
over in Cotton Patch, 1728 Cotton Patch, in Planters Ridge.
I mean, there was a great example. There was an agent that had that home before you, had it priced at $350, I think you said, and had brought the price down. Ultimately, it was $330 when it expired. You went in and did some staging, changed some lighting, got the seller to do actually pretty nominal amount of work, and you helped out with the staging yourself, and then raised the price back to $350. We still have to see where it sells, but I'll bet you it's going to sell for more than the $330 that agent had it at. And so it's, you have to do it right, and you are going to get better results for that seller than that other agent did, and it's because you just did things properly. Yeah. So I think that's going to be great to talk about in a month or two when that's sold.
That's true, and so people think that agents just go and stick a sign out and wait for buyers to come in. There is a lot of work that goes behind the scenes. If it's done right.
If it's done right. I mean, there's always that agent that, takes the photos with his iPhone and it looks horrible, and I don't understand how these people get paid, honestly. But in any case, if you do it properly, the seller is going to have a better experience. And if you don't do things properly, you might not sell at all.
True. And let's shift on to what this market means for buyers. Is this a better market for buyers than it was a couple of years ago, Jeff?
Well, in some ways, yes. I mean, buyers have, more choices than there was in the frenzy, and you have a little more time to think. It wasn't just like, before you had to make a decision immediately and you had to have super close, short due diligence and all like that. Now it's a little more comfortable for the buyers when they're making their offer. A good house will still sell very quickly. So you can't just sit back and think you have all the time in the world. But it is more choices, but the affordability issue is real, right? You have to factor in these interest rates along with the prices. And so, maybe be selective, make sure you're getting the right house. Sure. And then I think you can always make the case that if you find the right house, it still makes sense to move ahead and buy a house still in this. It's just like the stock market. You can never really know whether you're high or low. You can't
time the market perfectly,
But over a long period of time, when you're talking 7 or 10 years, you will almost always look back and say, wow, I'm glad I bought that house. I mean, that I think is almost for certain.
True. And as a buyer, it's always good to understand not just the purchase price, but also the taxes, the insurance, HOA fees, the maintenance, just so that you're an informed buyer.
Yeah, I mean, it's super important because obviously these fees really can add up, especially insurance now.
And definitely so much, right? Get informed about the 3-to-1 buy down or any buy down, because right now the numbers look good, but in 3 years those numbers will look completely different. So just be careful about the mortgage rate.
Yeah, and maybe that's a good time just to give that one caution again about, we can't assume that rates are coming down. We can look back at the end of last year. People were forecasting, 2, maybe 3 Fed discount rate changes this year, lowering the rate. In the beginning of the year, as things didn't look like it was going too well, then they reduced that to 1. Now there's talk that they're actually going to raise the discount rate. Where inflation has ticked back up. The war hasn't done us any favors with inflation. And so, while people are trying to make these decisions and think, well, rates will come down, I'll refinance, you have to kind of have in the back of your mind that you better be able to be comfortable with what you're getting to start with, because refinancing might not be an option. So anyway, I would like to just caution people that, it's easy to get caught up because there's so many realtors out there that operate under, don't worry about it, it's going to get better, but they don't know. So
but nobody knows.
Nobody knows.
Yeah. And even in the pickiest market like we have right now, and we had back in 2020 also, the best homes will still move. If a house is well priced, clean, and in a desirable location, it will sell quickly. Plus, there's always a matter of luck. You don't, like Jeff said, it's not a matter of getting 50 buyers. You just need that one perfect buyer who will write an offer, who's looking for your house at that particular time.
Yeah, absolutely.
So let's summarize the big picture, Jeff. Mortgage rates are still high enough to make buyers a little cautious. Purchasing loan activity is very low compared to the last 12 years, and investors are pulling back. Luxury market is behaving a little differently from the regular market, even though we didn't do a deep dive into the luxury market. And locally, single-family homes in Forsyth and Fulton are holding up pretty well compared to last year, while Forsyth attached homes appear to be slightly softer.
Yeah, and that's actually a great summary. And add one more thing, this market is where averages can fool you. If you hear that the market is up or it's down, hot, cold, strong, or weak, the next question has to be what market are you talking about? Because when we're talking about single family homes or townhomes, is it Forsyth, like we talked about in Forsyth, the townhomes were weaker, less sales there. So a buyer might get a better deal there. And then is it luxury or entry level? I think you had touched on the luxury here. One of the things for the luxury buyer is stock market's way up. They oftentimes have a bigger down payment to put down. They're selling a house. And so they're not as affected by these high rates. And so that part of the market is still maybe doing slightly better than the lower end. And so, so you really do have to look in these sub-markets when you're talking about these things.
Yeah, and I think that's where the real story is. Stay smart, stay informed, and stay tuned. This is Meesha Rawal.
And Jeff Aughey.
Saying goodbye.
Bye-bye.